is going on, everybody? Welcome back to another CYPRX fundamental video breakdown, keeping you all in the loop with what's going on in the digital asset ecosystem, going over fundamentals and going over my forward-looking projection as to what could potentially unfold, as we do have some important and key economic data on the front tomorrow during the New York session to be paying attention to. If you all enjoy these video breakdowns, no hopium, no bullish moon boy hype, just giving you guys some really good insights into the macro. Make sure that you do us a favor, smash that thumbs up button and subscribe to the platform. So overall, at the beginning of the week on X and on YouTube, I had mentioned to you all that a stronger dollar above the key 104 psychological level will most likely keep some sell pressure on the cryptocurrency asset class as a whole. Now, as of time of recording this video breakdown, it is the afternoon time of Thursday before the core PCE price index comes out tomorrow. And right now, cryptocurrencies are facing heightened selling pressure as Mt. Gox, the bankrupt exchange, continues to transfer funds to settle its debts, and on-chain data indicates a significant influx of Bitcoin into exchanges, which is reflecting sustained selling pressure and activity in the total cryptocurrency market cap, which over the past consecutive couple of trading days this week has declined over $67 billion. Meanwhile, the US dollar also remains robust, elevated above the key psychological level of the 104.200 as of time of recording this video breakdown, and remains strong against other major G10 currencies, following a spike to roughly around the 104.5 psychological level after the release of the US GDP figures, where the US economy did expand at an annual rate of 2.8% in the second quarter, surpassing expectations of 2% despite mixed readings. The GDP price index also rose by 2.3%, slightly below the market forecasts, while the core personal consumption expenditures price index increased by 2.9%, outpacing analysts' expectations. Additionally, today, the U.S. initial jobless claims also rose to 235,000. However, that was below the estimates and lower than the previous week's revised figure of 245,000, showing some slight resiliency in the U.S. labor market. Now, as of time of recording this video breakdown, before I share screen with you guys and we go into the technical analysis and fundamentals to be paying attention to tomorrow, the US dollar index is currently trading around the 104.300 psychological level. So with that being said, and that fundamental breakdown from today, let's go in and share screen. And I want to kind of just show you guys and do an overview of what to be paying attention to tomorrow and some things that took place at the end of June as we rolled over into the month of July. Now, I'm going to go over these two scenarios that we have here on the charts for you guys, which is a strong dollar scenario and how that could possibly negatively affect the total cryptocurrency market cap moving into tomorrow and the weekend. And then also going over another scenario, weaker dollar under lower inflation readings tomorrow, and how that could positively impact the cryptocurrency markets and what took place the last core PCE price index reading. So if we head over to forexfactory.com, showing you all this past information real fast, back on June 28th, 2024, we did have some lower core PCE price readings where we did see optimism that rate cuts were going to take place at some time this year in 2024 remain on the table. Here is a fundamental report from back at the end of June 28th, the last time that the core PCE price index came out. U.S. inflation relief and consumer cooldown boosts chances of rate cuts. So you can see here the May personal income and spending report has offered some encouragement that inflation pressures are easing once again after coming in far too hot in the first 3 months of this year. Now, Jerome Powell did reiterate to the market that the last 3 inflationary reports have shown signs of continued disinflation and has slightly boosted optimism that the Federal Reserve could potentially start to consider cutting rates in 2024, which is obviously, of course, bullish for digital assets across the board. Now, if we take a look at the price action that we experienced during the month of July, we are on a 4-hour chart here. You can see that the vast majority of July, outside this slight pullback that has taken place over the past consecutive couple of trading days, has predominantly been bullish, where here this was the low on July 4th at roughly around $1.92 trillion, and we continued the upwards trajectory the vast majority of the month of July, where just recently we experienced a slight retracement Now, interestingly enough, 2.2 to 2.6 trillion dollars, give or take this range, and where we're currently sitting at in price action is roughly where we were sitting at in price action back on June 28th when the last core PCE price index reading came out for the US. As you can see, the date here, this last posted reading came out June 28th, 2024, and you can see down here at the bottom of my charts, Friday, June 8th, 2024. So we are exactly where we were at in terms of the total cryptocurrency market cap valuation the last time that this report came out showing signs of continued disinflation. So I thought that that was very interesting how these markets work and how they pull back to areas of interest that played an important role in past dates. So with that being said, let's just go over some possible outcomes that could unfold, considering that the vast amount of trading days that we had in July did result in some buy pressure in the total cryptocurrency market cap, where we topped out at roughly around $2.4 trillion. And what could possibly unfold if we see higher or lower inflation readings tomorrow. So let's cover a scenario on the total cryptocurrency market cap, and then we'll also take a look at the US dollar in just 1 second. And let's go over some scenarios. So, first scenario would be scenario number one. That would be stronger dollar, led by higher inflation readings month over month and year over year in the core PCE price index. So tomorrow, if the readings do show signs that inflation is still sticky and troublesome, pushes rate cut hopes back, and dampens risk mood and further strengthens the dollar, this would be most likely led by a month over month reading of anything 0.2% or higher, or a year over year reading of 2.6% or higher, and would most likely result in reduced rate cut hopes. You can see here positive economic indicators, weakening the market's expectation of a Fed rate cut, increasing dollar strength, and that would most likely lead to a decrease in demand for risk assets, where a stronger dollar does often lead to reduced demand for risk assets like cryptocurrencies as investors seek safer investments. So, with that being said, if we do see higher inflation readings tomorrow, most likely scenario that I can see unfolding is we are going to correct more of this previous bullish move that we created mid-July, possibly failing to break above the $2.3 trillion mark, i.e. this lower high that was just recently created over the past 24 hours, and continue this overall downwards trajectory that we've seen in the cryptocurrency market over the past 3 to 4 trading days, coming and tapping back into $2.1 to $2 trillion flat. Again, correcting more of this previous downside move. Now, this again would be a scenario driven by higher inflation readings. So let's just take a second and look at the dollar. That would again be this scenario, stronger dollar led by higher inflation readings, a core PCE price index reading month over month higher than 0.2%, and a year over year reading of higher than 2.6%, showing that inflation is still sticky and troublesome, weighing on rate cut bets and dampening risk mood. Now, for dollar, we would most likely see dollar break above the 104,500 key psychological level, hold some bullish order flow above, and start to correct more of this previous downside move from last week, breaking above the key psychological level, or at least revisiting the key psych level of the 105, right? Again, this would be a less favorable scenario, the scenario that the vast majority of crypto enthusiasts and investors would not like to see. Now, on the flip side, the more favorable scenario would be led by scenario number two, and that would be a weaker dollar scenario, which would most likely be led by if we can see lower inflation readings tomorrow, feeding into that rate cut narrative and optimism, driving greed in risk assets, and weighing on the strength of the dollar. So what we would need to see tomorrow in the core PCE price index reading month over month and year over year is a month over month reading of 0.2% or lower and a year over year reading of 2.6% or lower. This would most likely result in core PCE readings showing signs of continued disinflation, and we know lower inflation readings tend to suggest that the Federal Reserve might be more inclined to cut interest rates, which does reduce the dollar's appeal. Now, increased rate expectations does tend to put some sell pressure on the dollar and create higher demand for risk assets. As expectations for lower interest rates rise, risk assets like cryptocurrency tend to become more attractive, decreasing the demand for the dollar and increasing risk appetite. So, with that being said, if tomorrow we see this scenario unfold, led by lower inflation readings, then most likely scenario for the dollar's case is we are going to fail to break bullish above both the 105 and the 104 key psychological level. And we are going to continue this overall downwards trajectory that we have seen the vast majority of the month of July. Now, to what degree we drop lower on the dollar, again, that's up for debate, but most likely scenario is we do break lower, fail to break above the 104.5, and start to make our way back to the downside. Now, how that would most likely correlate in the digital asset landscape, i.e., looking at the total cryptocurrency market cap, if we can see that scenario unfold, again, a scenario where we do see dollar weakness, let's just pull that up, right? Again, core PCE price index readings month over month below 0.2% and year over year below 2.6%, boosting rate cut optimism, weighing on the pressure of the dollar, and increasing demand and risk appetite. Most likely, how that will look in the total cryptocurrency market cap, give or take some liquidity grabs, is a bottoming out of roughly around $2.1 to $2.2 trillion and making our way back to the upside, continuing this overall bullish trajectory that we've seen the vast majority of the month of July. This would obviously, of course, be the more favorable scenario to bottom out, start to accumulate more orders where we were accumulating orders back when the last core PCE price index reading came out, and start to make our way back to $2.4 trillion and possibly breaking higher, right? So I hope that you all understand what it is that we need to see tomorrow. Ideally, to see a risk on market mood. Remember, these are key fundamental drivers that actually move price action intraday, day to day, and week over week. As always, many blessings to you guys. Be cognizant, be aware out there, and I'll see you all in the next video breakdown.